Real estate is often your largest and most valuable investment. And there's so much to know about buying when you're looking at acquiring that property for yourself. We have with us right now the person that can give you great tips, and that's Denise Webster, mortgage broker. So Denise, what are things that people need to know about when they're starting their journey to buying real estate?
Well, Tony, I think the most important thing is that they actually get their pre-approval before they start to look at their market. What if they got their heart set on something and they were out of their price range? That's just such a shame to have even started there. So a pre-approval with your mortgage broker is first and foremost. Find out where you're comfortable in your pre-approval. Look at what those payments would look like. Does it fit into your budget? So we're going to talk about what is a pre-approval today.
All right. And this it's so important because it's just like when you're buying a car, you don't want to be out there looking at a Mercedes and find out afterwards that you've got a Honda budget, right?
Absolutely. Yeah.
Yeah.
It's just, it's disappointing, right?
Yeah.
Because if you really did think that was going to be where you were headed and then to have it swoosh away,
Yeah.
and that's just not what what you had envisioned, then yeah, it's disappointing. So start with something that you're already, you're going to be comfortable with. There's no disappointment involved.
All right. Sometimes people actually go online and they fill out these, quick forms where a lender might say, fill in these things like your income or whatever.
The mortgage calculator.
The mortgage calculator. And I mean, without beating around the bush, there's concerns about that because that is not the full picture.
Very much so, because really what that calculator is doing is giving you an idea what the mortgage payment would be. It is not looking into the debt servicing, really. It's not taking into account any of your other debts, your gross income. Maybe there's more income we could prove for you. It's also not taking into consideration of the property you're looking at, and maybe those property taxes are going to be higher. We have to calculate that into the debt servicing as well. So a quick mortgage calculator telling you how much your mortgage payment is could definitely look like you could afford it, but we've got to factor some other things in there.
For sure. All right. So you've got some points and directions for people for the approval process.
Yeah, I think I just want to have borrowers understand what is a pre-approval, and I'm going to actually change the terminology of that. It's a pre-qualification, because the word approval can really mess you up as well.
Yeah.
Right? So at the end of the day, I am pre-qualifying my clients, my borrowers, and I'm looking at their income docs, their credit, and their debt servicing, but I have no idea what they're going to buy. So the lender also has to approve the property, Tony, and that's when that full final approval comes in, when we have an accepted offer. So I will pre-qualify you, then I will get an approval when you have an accepted offer.
Perfect.
Okay.
All right.
So number one, with a pre-qualification, the most important thing is taking your mortgage application so that I can pull your credit history, your credit report.
Okay.
So what does a credit report tell me? It's going to tell me what your existing debts are, where maybe some balances are, what the limits are, and it's really going to give me a snapshot of your credit history and if there have been any blemishes. Really important for me to look at the credit and ask a lot of questions about it. I'm looking to see if your addresses are matching up, because a lender's going to ask me if we're out of sync on some addresses. Has somebody else applied for credit under a different address? So that's a really important conversation to have with my borrowers. Let's look at the address history on your credit report.
Okay.
I also will look at inquiries. Did you know so-and-so was looking at your credit? Because we can see the last 3 years of anybody that's pulled your credit. So let's make sure that makes sense to the borrower. And then let's look at the actual, we call them trade lines. So it's your line of credit, your credit cards, your loans, your student loans, your cell phone. So anything that you have signed terms to agree to pay, that's what's going to be on your credit report. It's not going to be your BC Hydro, because that's a utility that we are allowed to have. We didn't sign a contract with BC Hydro. But don't be fooled. If you don't pay BC Hydro, it will show up on there as a bad debt.
Of course. Yeah.
Right. So your credit history is probably the most important thing for me to look into as we start your pre-qualification. Number two is your income. You can definitely tell me what your income is, but until I actually gather your documents and do some calculations, then I can actually verify your income. So straightforward with a T-Ford employee, we need to have an employment letter. It's going to state when you started with your company. your job title, and your rate of pay, whether it be an annual gross salary or an hourly rate with guaranteed weekly hours. Then I have to look at that pay stub to see if it matches the job letter. So are you receiving that hourly wage? And do I see a minimum of 40 hours per week? That's a really big one that can catch a broker if we haven't actually looked at the pay stub and you've told us you always work 40 hours a week and then you supply a pay stub and it's got 30 hours. That's a really big red flag because maybe you're not guaranteed 40 hours. So pay stubs need to match the job letters. I'll also be looking to see if your year-to-date gross income is on track. So if there is a lower year-to-date, is there an explanation? Did you take some time off this year without pay? I will put that into my notes for the lender because I don't want the lender coming to me saying, why is this not added up? I need to do my due diligence and ask questions about your year-to-date income as well.
Yeah.
Then we have our self-employed income. So we've got to look at a 2-year tax average. What are you claiming to Canada Revenue? We're looking at your gross income of your business. We're looking at your net income. And then we're going to use a little bit of a grossed up of your net income. So a 2-year average is really important. And most importantly, you have to have full 2 years of your self-employment. You cannot just be newly self-employed and get a mortgage. Lenders are looking for some consistency in your income. So a 2-year average is critical. Mm-hmm. So that is so important. You cannot just put on your application what you make as your income without having a broker review these documents. Mandatory that we look at your income documents.
Got it.
Okay, number 3 is the down payment.
All right. So we had number 1 was credit, number 2 is income, number 3 is down payment.
Down payment.
Okay.
This is a conversation that you really need to wrap your head around because we need to provide a 90-day transaction history from any bank account that is going to provide the down payment. And what we're looking for and complying to the Money Laundering Act is any large lump sum deposits that cannot be explained. So both myself and the lenders, we're going to look through that 90-day history. And what if we saw an ATM cash deposit, we need to find out what that was and what correlates with that. So usually a cash deposit, let's say that's a bill of sale. You sold your bike and you should have something that correlates with that, a bill of sale. Mm-hmm. Now I can use that income. But gosh forbid, you do have mattress money and you rolled all your coins and you had your house jar of money that you were saving and you deposited $4,000 into your bank account. There is nothing for me to verify where that came from. You can tell me it's cash and I'm really proud of you that you did save that, but I cannot use that for part of your down payment.
Of course.
So get that money in your bank account now before you even think about buying a house, because I'm going to look in that 90-day history and I don't want to find something that I can't explain. Now, on the other hand, you might have a large lump sum deposit that came from a gift and it was immediate family that sent you money. That's a very straightforward transaction with a gift letter signed between your parents or your immediate family member and you as the borrower, stating that it is a true gift not being repaid and the amount on your gift letter matches the amount in your deposit.
100%.
Last thing on the down payment is you might be pulling your RRSPs.
Yeah.
It's really important to know that those RRSPs have to be in your RSP account for 90 days before the completion date of your purchase. Otherwise, you will be pulling them early and you will be paying tax on that income. So it has to have been in an RRSP account 90 days prior to your completion date.
Wow. Okay.
A lot to absorb here.
Oh, yeah.
This is my job though, right? So I'm going to guide you through it.
Yeah.
Number 4, what happens after your pre-qualification? Well, this is the fun part. You get to go and meet Tony and go and look at houses.
Yep.
And you've made your head and your heart wish list and you know what you're looking for. You know where you're comfortable in your mortgage payments. We'll have gone through all those calculations. So here's what not to do after your pre-qualification. Don't go quit your job. Right? Let's hang on to that employment that I've already verified. Now, that doesn't mean you should not take a promotion. If you do take a new job, if it means that you're going into a probationary period because it's a new job, quite often lenders are okay with that. If it's still in the same industry, you're still in your field of knowledge, you know what you're doing, but you've taken a promotion, you cannot be penalized for that. Yeah. But if you were to take a very new job in a completely new industry that you've never dabbled in before, there are lenders that are going to want you to serve that probationary period before you're going to be qualified. So you would definitely want to talk to your broker if you're thinking about taking a new job while you're in the middle of looking for a home. You're also not going to go and acquire a new car or
Okay.
kind of new debt,
Yeah.
right? I've looked at your credit. We've accounted for your debts if you have any. They are in your application. We've worked those in. So if you suddenly surprised me with an accepted offer and I didn't know you had just got a new car, you have changed your pre-qualification. So your debt should stay the same, if not get lower while you're in your pre-qualification, and keep that the same. No new loans, no new credit cards. I think no new loans, probationary period, don't quit your job.
Yeah.
And don't go and try and find something well over what we've pre-qualified you for, because that's just going to get disappointing. You really should have a great idea of what you were qualified for. So if you suddenly came to me with something well over that purchase price, it just can become a disappointing, some disappointing news back at you.
Yeah. So what you're saying is buy within your means.
Absolutely. I don't want anybody, any of my clients to be mortgage poor. We still want to go out for dinner, hopefully.
Yeah.
Still want to have some vacations and whatnot. We do not want to be mortgage poor and just pay our mortgage and live in our home. So that is a conversation I have to have as well.
So the 4 things that you touched on in this video is credit, income, down payment, and things not to do after you get pre-qualified. Don't take out that new car loan. Don't take out extra debt. The main thing for people to know is a buyer should get all these things arranged with their mortgage broker, with Denise, you know, with whoever you bank with, before you start shopping for properties. Because a lot of times people do it backwards. They go shopping first, and then they call up their banker and go, oh, you know, we got to do all this kind of stuff. It puts you in a really high stress situation, because then you've got to do all the stuff that you should have done in advance. And Denise even mentioned a couple of things like like math and, you know, changes in job, T4, matching the hours with what's in the job letter. These are things that you cannot determine when you're going through an online process with a bank. So it is crucial that you speak to a mortgage professional, get all these things figured out, and then we can go out and start looking at properties, because you're in a much stronger, in a much better position, and fully informed too. You'll be able to make better decisions as opposed to on the fly. So very important. And you know, buying a home is supposed to be an enjoyable experience and not one that is really full of stress. If you need any more information or have any more questions about the home buying or selling process, get in touch with us. We're here for you. Thank you, Denise.
Thanks, Tony.